Hello, everybody. Welcome to Friday. I'll do a little weekly summary for what I saw happening in the stock market this week. It was another good week, actually. Last week we went up every day. This week we were up, Monday through Wednesday. We were down yesterday and then back up today again. So, it's the first half of July, best time of the year seasonally. So that's working out quite well. Um, and if you look at kind of what was going on this week, we had Chairman Powell speaking on Tuesday and Wednesday. And although the market didn't move that much on Tuesday, it actually moved quite a bit on Wednesday. It was up about 1%. And then the CPI report came out, and we had a really wild day actually yesterday. CPI report was good, was lower than expected in terms of the inflation, especially on the overall top line inflation, but even core inflation was quite good at 0.1% growth month over month. So, those are good numbers. Now, again, the Fed really looks at, the PCE, which comes at the end of the year, but end of the month. So what's happening right now, we saw this massive rotation on Thursday yesterday. The S&P 500 was down 1%. The NASDAQ actually was down 2%. And the Russell 2000, which is the small cap index, was actually up 3.5%. And we haven't seen anything like that since November of 2020. And so it was pretty violent. And what you're seeing there is that the market is looking at the possibility of rate cuts with a much more aggressive outlook as to what might happen, and buying large tech stocks as kind of a safe haven. And the rotation into small cap stocks probably is happening because people are feeling more confident that rate cuts are going to come sooner than later. Hopefully, they do it before they kick us into a recession. September is looking quite likely. The bond market today actually has a couple different articles coming out that maybe is factoring even a half a point rate decrease in September. I'd be surprised to see that, but whatever happens between now and then, we'll have more data. We'll be able to figure that out. But we've got this scenario today where we bounce pretty much back, above 5,600 again, up 0.55% on the S&P 500. So some, dip buying came in, and some of those big tech stocks that got sold off did pretty well. Semiconductor index was up a fair amount, today too. So after selling off yesterday. So it is interesting. We have to watch these rotations because what will happen eventually is that the small caps will start to be the big winners, and you want to have a little bit more exposure to those to keep up with the overall market. But what's happened with small caps, unfortunately, is that they keep having these runs, and then those runs kind of fail. And really, if you look at the chart, they're going sideways in comparison to the rest of the market. You will see at the end of these big runs, small caps do well. So, for example, in 2021, at the end of that big run before the market fell, small caps were doing quite well. If you look at the end of the dot-com bubble, small caps were the king as far as that goes. So it's very normal that you get a higher level of risk. People are going out looking for higher and higher rates of return, start rotating toward those. I think it's a little early to see the small caps really running on a strong basis. We'll see what happens here. I think there's a couple things in the way. We're still not truly out of the woods as to what's happening with inflation. Example, today we got the PPI report, which is the producer's price index. It's wholesale inflation. And it was actually higher than expected. And so, that's a precursor for inflation, is what's happening on a wholesale basis theoretically can translate to what's happening on a retail basis. And so, there's still not completely out of the woods. And maybe that's why those large caps picked back up today. We've got a little ways to go. Besides that, we're heading into earnings season, which started today with the big banks that did quite well in their reporting so far. But we're going to have these big tech companies report, and they've been reporting just great numbers time after time, quarter after quarter. So, going to take some attention away from those small cap stocks. I still think there's some room here for the large caps to do quite well for a while here. At some point in time, maybe when they actually cut rates or what have you, and get more and more confidence in the economy and the market and what the Fed's going to do, you might see small caps do better and better as far as that goes. So really interesting week. Didn't seem to have too much impact with Chairman Powell testifying in front of Congress. I thought he said a few interesting things. He highlighted more the focus on, dealing with the softer job market. The number of job openings is still very high, but it's come down, quite a bit off of its high. as far as that goes. And then the unemployment rate jumped over, 4%. It's at 4.1%. Their target is 4% or better. And so again, that made the market, I think, feel like, hey, these rate cuts might be coming. But he said the same things he's always said, which is that they want to wait and see the data. As the data comes in, they want more confidence. He said this many times, more confidence that inflation is not going to come back if they start to lower, rates again. So which is what happened, unfortunately, in the 70s. Started to have a softer job market. Federal Reserve at that time lowered rates, and then inflation really got out of control. And this group talks about what happened in the 70s quite a bit. So, they're cognizant of it. They want to make sure this doesn't happen. Of course, they could go the other way and leave rates up too long and cause us to kick into a pretty good sized recession and have a lot more unemployment in that scenario too. So they're always walking that tightrope. It's a very, very difficult job. You're basically guessing where things are going to go, and you have to guess where they're going to go in the future because the changes that you're making to rates change things in the future, predominantly 3 to 18 months from now. So anyway, we'll see how that all plays out as far as that goes. But really good week altogether. Another positive week. Really good 2 weeks here. First half of the year is over on Monday, or first half of this month, sorry, is over on Monday. And so we'll see what happens after that. Generally do see softness starting around the 17th historically. We'll see if that plays out this time also. There is one interesting thing happening that is, I think, maybe going to move the market to continue to hold it up, and that is the possibility of a rate cut in September. There are lots of things happening to make the market go down. Got an election, oftentimes September and October before an election, money kind of holds back until we see who wins and how Congress is made up. And that's why November tends to be quite good as that money comes in. September is the worst month of the year, on a seasonal basis. So there are pieces that can tamp down the market, but that rate cut possibility in September might offset. It'll be really interesting to see how that plays out. So anyway, that's where we're at for this week. I look forward to being able to, talk about this again on Monday. And I hope everybody has a great weekend. Thank you very much.